that North Star Leasing made during this entire last 12 months. And the reason why was, our customers were so tired of hearing General Motors with their advertisements, "We're here to help you." I don't know what that means during a national pandemic on buying a new car, how that's going to help you if you're trying to make your payroll. But this was one way of helping small businesses across the country just defer the payments. And it helped our customers, it helped our vendors, it helped our brokers, and most importantly, it helped my employees understand that we are all in this fiasco together, and that we had to work very closely with the entire portfolio, which at that time was about $75 million of net investment from 4,700 customers. And we actually talked to every single customer who owed us more than $50,000 in a net investment and had monthly payments greater than, I think the exact number was 2,500. Point being is, if you don't know your customers during a difficult time, it's really difficult to get to know your customer when the times get even worse. And what happened is, we found out that of the $3 million that we deferred in the month of April, we all of those folks, with the exception of 4 accounts, have come back and have become current with North Star Leasing. So the point of my story is to tell you that it's easy to give away money in leasing. You got to figure out, you got to make sure that you know your customer, so that when times get tough, you can actually be in contact with them and sort of work through the problem. And so this pandemic is unique to all of us. I hope we'll never go through this again, but having been through the Great Recession and now the pandemic, I figure I've sort of been through it all, along with the rest of the guys on the team here. And so what I want to do is, I want to reach out, I'll start with Pete Tamposi, and to reflect on, when I got involved in North Star Leasing, it was like, oh, you got a collection problem, get an attorney involved. And what's your view on that?
Thanks, Dan. That's a good question. In my view, if you are involving an attorney, and don't repeat this and say that I said it, but I think you've got a problem. You've already got a problem. I think you really want to nip it in the bud well before that point. And if there's one takeaway from today, it's try to manage your receivables before you get to that point. And I'll talk about some of the tools we can use to do that, and I'd like to talk about some of the advice I give my debtor clients in deciding whom to pay and when to pay.
Great. Thanks, Pete. We'll get back to you in a little while. Sean Smith, how has Dedicated changed your approach?
The way some of the advice I give my debtor client.
Somebody's on. If you're not speaking, if you can just put your computer or your phone on mute, that'd be great. We'll backsplash there. Dedicated. It looks like it's Mike Coon. Mike, if you could put your phone on mute, that'd be great.
One veteran calling out another. Love that.
So let me go back to the question. So Sean, maybe you can give everybody here an opportunity to talk about. You can tell them about what's Dedicated. How have you embraced change during the COVID-19?
Yeah, I think one of the big things we learned is how much work it was going to take to communicate with people, and super frequently. The situation was changing daily, weekly, right? So any plan you made on a Monday, chances are by Wednesday, you had a whole new plan. By Friday, another plan. And by Monday, it was, you know what I mean? And so we had to switch during that time to the highest level of customer service that we had ever even attempted, where we put every person on basically a weekly call that was on payments. And for us, that's in the thousands. So it was communicating literally with thousands of people every week. And so we leaned in, we hired during that time so that we could cover that. And that, Dan, I know I've some of the things you said and how it went for you is very similar to us, is because we were very proactive. And, this had been learned previously from hurricanes and natural disasters and other things. When you were very proactive with helping people in those situations, you became the first person they came back to. And, so we went from this steep decline and doing all these modifications and talking to people weekly to all of a sudden this steep incline. And by June, we had literally doubled our collections numbers. And obviously PPP helped that, even though we weren't directly asking for it. But because we had communicated so frequently during that, it just came back to us. So, that was one of the biggest things we learned, was doing that at scale, though. Normally you have these isolated pockets where you can do that, but doing that with every paying account, then still trying to collect on top of that with all these other accounts was this monumental task for us from our position. But it applies to any funder, is, reallocating people to customer service and getting hyper intentional with frequent communication and working with them and taking a proactive approach. Really made all the difference for us, to where we were able to experience close to 300% growth through 2020 versus, the opposite of that, which I think, had we used a heavy-handed approach or not been as proactive, I don't think we would have seen that whatsoever.
Right. I agree with you, Sean. I think it's very difficult for a lot of the customers out there. If you're getting shut down and the government shuts you down, it's not like these folks can go into their left pocket and pay off the person in their right pocket. And the ability, and they remember the compassionate conversations that you have with them early on. We all want to get paid, no question about it. But if you can't get paid if you have no revenue, and you just, those folks who you were honest and upfront with and worked with, they always received, at least in our case, they always received our second or third phone call to sort of how we doing. So with that, Walt, how's Quick Track, the technology you're using? How is that? I know it's a tool in our toolboxes, but how has that been working over the last 12 months?
Yeah, it's so our process hasn't changed, but it was interesting because the contacts we make with people. So our process is, if on collection inspections, if the communication has been lost between, say, someone like yourself, Dan, and your customer, if the phone calls aren't working, letters aren't working, we literally send an inspector out, usually with a notice, to the person's business and our residents. And really the goal is to just reestablish communication. And one of the things that we have noticed is that it's actually been a little better on making these calls, because there was a fear factor that stopped some of the communication. And what we're finding is, when the inspectors go and ask these people if they'll just call the goal is to have the customer call their lender while we're there. That happens, probably 25% of the time, maybe. But the difference has been, the lenders, all they want to do is let the people know, hey, we're going to help you. We're not just calling to get the cash. We understand there's a problem. So it's been almost a little more refreshing, even though it's tougher times, to get the feedback from our lenders and even the people that we're visiting. So that's been a very positive, let's face it, collections are never fun, but it hasn't been bad, right?
So one of the, in our earlier warm-up call, Walt, you talked about over the last year, you've made some changes to work more effectively. So what have you done at Quick Track to make life a little easier for everybody, work more effectively, work a little more efficiently?
One of the things that we kind of had before the pandemic hit, but this just kind of made it launch much to greater extent, was virtual inspections, basically where we're actually getting a hold of the customer who doesn't want to have an inspector on site for some reason, and we have a software that allows us to do a full site or equipment inspection, and there's no chance of fraud taking place, with somebody taking pictures that you don't necessarily trust. So that's been a very, very well used tool in our toolbox.
Great. And Sean, what are some of the funding metrics you're using in your at your company in making life easier for your, because you're reporting back to your customers on how successful you are. So what are you using? What's the key metrics you're looking at?
I'll change questions just a hair, but really is kind of what is the data, right? And data is becoming a big buzzword, and how are we integrating technology with that? And so one of the things that we're talking with our clients is having a clear transparency between funder and third party on the data that they're seeing. And I think that is going to drive that evolution of collections. Data is going to be extremely important. How you warehouse it, how you segment it, and how do you utilize it in both your front end decision making process and your waterfall process on the back end. So we are trying to partner more and more with our funding companies to, continue to adapt and adjust reporting frequency, the amount of it that they're looking at and how they're looking at it to better influence their decisions. And I think one of the leg up that this industry has over others is that with its longevity in the market and equipment leasing being around as long as it has, is that they're utilizing that data to compare which vendors to work with and success rates and things like that. But I still think that data and how we're utilizing it, and then investing in technology that helps that decision making and driving greater human connection with it, not trying to replace human beings, but rather to drive greater human connection, is going to be really important going forward. So we now work directly with Microsoft on the Azure program and storing all of our data there. And we're working on technology right now that really maximizes the use of that data, both for ourselves internally and for our clients. And I can't advocate enough for the industry that they say if the product's free, you are the product, right? And you see Facebook and all these other companies doing that, but are we thinking that way in the equipment finance industry? Are we compiling that data and utilizing it to make faster, better decisions, to have machine learning and AI do what really we shouldn't have humans doing, so that humans are connecting greater, right? And that data and those metrics getting refined. Our old scoring model had about 40 different data points. Our new scoring model now has over 400, because we're maximizing that data. So how we invest our time as a third-party agency, which is a large portion of our business outside of first party, right, is we're only getting paid if we get the funders' money. So we have to really put our time in the right places, and just maximizing the use of that data has become really important.
Well, it brings us to a good point, starting point, Sean, is it basically know your applicant, get as much information up front during the application process. And my father used to tell me always, he said, always plan for your divorce before you get married. So in this case, get as much information as you possibly can before you actually write the check. So in the event the deal goes bad, you have as much information at your fingertips to go get your money. And so what that brings us to Peter and the product that he has, Lease Security Systems. He has a very unique product that if it gets installed at the time of sale, it allows him the ability to sort of put a little pressure on the customer to make their payments. So Pete, you want to go in and just explain a little bit about how that works?
Sure, and thank you, Dan, and thanks, Blair, for putting this together. So again, my name is Peter Tamposi. I'm a lawyer. I've been practicing for over 25 years now, mostly in the bankruptcy realm and as a commercial litigator. I'm also the founder of Elite Security Systems, as Dan mentioned. And there's a couple things I thought would be helpful to discuss today. And one is talk about the advice that lawyers give their clients when they're in trouble and trying to prioritize whom they should pay. Again, like Dan says, this is kind of planning for your divorce when you get married. The second, I'd like to talk about some of the takeaways I found by interviewing leasing executives as well as collection lawyers to find out really what's going on the ground today. So to be clear, I'm not the lawyer you call when your customer isn't paying you. I'm the lawyer your customer calls to decide whether he should pay you. So I'm giving you a little bit of inside baseball today, but I should probably have my voice digitized and be in silhouette right now. But you know, I've helped hundreds of clients over the years to restructure their debts and often, to be honest, avoid paying on their leases or loans or restructuring their loans through bankruptcy. But now somehow I find myself in the leasing industry through founding lease security systems. We're the folks who brought the block box to market. It's a remote disabling device that allows lessors to disable any equipment in the field with the click of a mouse. So this is not for rolling stock. We've seen that before. This is for any electric powered equipment, and it's often installed before the collateral goes out into the field. Or even if you have a borrower who's already in default, you can install it after it's already in the market, already in default, and we partner with QuickTrack for that, and they've done amazing work. I'm also the founder of a founding shareholder of a small community bank here in New Hampshire. So some may say I've come over to the light side from the dark side. But I have a couple sort of critical observations that I thought would be helpful, and that is defaults are usually conscious decisions. I think there's a misunderstanding that people are falling on hard times and they're unable to pay their leases. That's really not the case in my experience. They just prioritize other things more. I don't think people are inherently bad. Very few people borrow money with the intention of not paying it back. And most people want to do the right thing. They just have to make hard decisions when times get tough. And I have a couple sort of quick stories that illustrate that. I had a gentleman who came in to hire me. He had borrowed money on 5 skid steer loaders that he was lending out. He was in the rental business. And he said, you know, that my lender is coming after me for payments on the loaders, and who happened to be a NEFA member. And I said, well, why don't we just give them back and then we'll deal with the deficiency? And he said, well, I've sold them all on Craigslist for cash, and I don't know the names of the borrowers and the buyers, and all the cash is gone. And I said, well, you don't need me, you need a criminal lawyer. And we never ended up going forward with that. But that's one side of the spectrum. That's the 5%, I think, in my experience. But the more common borrowers that you deal with is that, like the gentleman who retained me a couple years ago, and he owed $600,000 on 6 large printing machines, also to a NEFA member. And he came into me and I said, well, so when was the last time you made a payment on those machines? And he said, geez, it was 10 months ago. It kind of shocked me, to be honest with you. He was still using them. I said, are you still using them? Yeah, they're my main source of revenue. I said, huh, okay. Are you still paying your landlord? Yep. You still paying utilities? Sure. Other loans? Yep. You still paying yourself? I am paying myself and all my employees. So this demonstrates the choices that folks make. It's indicative of the advice that I and other lawyers have given and give all the time. And, you know, people come into us, bankruptcy lawyers, and ask, who do I need to pay? Who do I really need to pay? And keep in mind, they're trying to stay in business. They're trying to figure out who needs to get paid and who they can push off. So it comes down to priority. And if I can figure out this, I have a list of, let's see, where is she? A list of who needs to get paid. Try this. Okay, stand by. Can you see that?
Yes, sir.
Okay, great. Okay, so creditors paid in order of priorities. This is important because this is the stuff that lawyers like me and your clients are going to be deciding when times get tough. Number 1, utilities. It makes sense, right? These guys keep tight control on their product, power, gas, water, and they'll shut it off in the minute you miss a payment. Number 2 is similar, and these are communications, so cell phones, internet, landlines, same as utilities. In fact, they're treated now in bankruptcy as utilities, but you need this product or your business is dead. And they'll shut you down quickly, and everybody knows that. Everybody knows what happens if you don't pay your cell phone bill. You don't have a cell phone, and you know, people don't complain if their cell phone gets shut off because it's sort of understood that that's what happens. And it also reveals yourself as a deadbeat if you're complaining about your cell phone getting shut off. So the third is a little bit of a sleeper, and that's banks with liens on bank accounts, and we call that cash collateral in the business. So many term lenders or line of credit lenders strongly encourage their borrowers or require them to bank with them, so they have all their cash there. And if you get behind on your loan or your revolving line of credit, the bank can simply offset that account. So again, this is a case where the lender has control over their product, which is their cash, and they won't hesitate to do it. And if somebody offsets your account, you're looking at a Chapter 11 to get that money back, or just folding your doors. So again, this is in the list of priorities. The next is payroll. Of course, you need your employees, right? They're critical to your business. You need them to come in every day. But do the owners need to pay themselves? This is a good question. It's a question you should be asking your customers when they're not paying you. Are you paying yourself? Payroll. And it's more nuanced than that, because if you're the owner of an LLC, you often don't pay yourself wages. You give yourself monthly or quarterly distributions. So if you ask your clients, are you paying yourself payroll, they may say no while they're giving themselves distributions. In the case I just talked about with the copiers, the gentleman was paying himself $100,000 a year while not paying his lessor. The other interesting thing about payroll is payroll claims survive bankruptcy. They survive the bankruptcy of the company, and they survive the bankruptcy of the principals. So whoever's writing the check, if you don't make a payroll check, company folds, and even if you file personal bankruptcy, this obligation is going to hound you after the bankruptcy. The next is taxes, including payroll taxes. And the payroll taxes are just like payroll. The IRS will hound you for the rest of your life through your business bankruptcy, through your personal bankruptcy. It's a high interest rate, and it compounds daily. The next one is critical vendors. So these are suppliers of raw material, goods, and components. By the time somebody comes into me, they're often on COD. So they're not getting their critical components so they can manufacture their widgets without coming up with cash. And so they need that cash to keep the business going, and if they don't, they will shut down. The next on the list of priorities is the landlords. Now, in times of COVID, landlords have been pretty, they've not been as aggressive as they have in the past, but they can cause you real trouble when they are aggressive. And we're seeing landlord deferrals end right now. So they can, nobody wants to come in to the office in the morning and have their employees see an eviction notice, and they can change the locks. They really can't do it legally, but they do it occasionally. So landlords are critical in terms of on the payment list. The next is a sleeper kind of, and something that many of you don't think about, and that's trade debt that's personally guaranteed by the owners. And this is sort of pre-bankruptcy planning. If somebody thinks there's a chance the company's not going to make it, they're going to want to pay their debts, even old debts. This might be old debts on stuff that's not critical, but stuff they personally guaranteed. And people like me would advise them to pay that off ahead of other creditors. So in the event the company fails, you're not personally paying for the consequence of the company failing. And last but not least is lessors and equipment lenders. And I'm sorry to say, this is usually last on the list of priorities. Up until now, you've generally had limited control of your collateral and really minimal or non-existent leverage. Communication is key. Dan's exactly right. And I tell my clients, keep communicating with your lenders, your lessors. Keeping that line of communication open is critical, but that doesn't necessarily include payment.
So
at
Pete,
this point,
Pete, along these 9 points that you have, I think are awesome. This is really important for. I have a fire truck going by here. Sorry. This is important as someone who's financing transactions. When your collections team and have your customer service folks, these are really important to get a script together. So sort of let your customer not hang himself or herself, but who are you paying? Why are you paying them? Right. The ability for you to pay the utilities is because you're using my piece of equipment. So,
right.
And again, you just let them and you walk through it in a way that's non-confrontational. It's factual. It keeps the emotions out of it. And then at the end of it, you say something along the lines of, so let me get this straight. You're using my piece of equipment to pay yourself and
money.
everybody else, but you're not giving me anything. Does that seem fair to you? I mean, you just leave it at that.
Well, so you got to understand that, again, people make choices. You'd be surprised how much folks can find money when they have to. They can always find money for the utilities. They can always find money for the communication folks. And this was the impetus behind BlockBox. People would come into me to file bankruptcy, and they always owed the most money to the equipment folks. And why is it? Well, it's for the reasons we just talked about, because they don't control their collateral. They have no control over it, generally speaking, and they can't compel payment. You can call, you can write letters, you can send emails and texts and check social media, but you can't really strongly encourage somebody to pay. And people will put off paying themselves. They'll put off paying the landlord. They'll negotiate harder with trade. They'll put off paying the personally guaranteed debt, or they'll renegotiate with suppliers to find money to pay people in the 1, 2, or 3 priority level. So if you can get yourself up there as an equipment lender, then you're going to have a lot fewer of those hard conversations. My idea was to sort of level the playing field between lessors and lessees, right? There's an imbalance of power, in my view, that increases as the lease goes on. And why is that? Well, it's obvious. At the tail of the loan, the power is shifted because the equipment is depreciated. It becomes less attractive to repossess. You're not getting paid. Your collateral is still generating revenue, and you have no control over it. It's not a good place to be. And somebody like me might be whispering in your client's ear, in your borrower's ear, saying, well, you don't have to pay them. They can't really do anything. They're not going to do anything. So the key, in my view, is to let, and I said this at the beginning, is never let the lease get too far behind. If you're 60 days or 90 days overdue, you're clearly not in the top 5 priority level, and your leverage has waned. And like I said earlier, if you are hiring counsel, it's a problem.
Right.
And people have said to me, well, isn't remote shutoff confrontational? But it's not. It's certainly less confrontational than a repossession, right? A repossession, you're hiring counsel, incurring fees, taking somebody's means of earning a living away from them, going in, forcibly removing it, and the relationship's over. At that point, it's over. The idea behind the BlockBox is to re-educate people about the priority of your bill. You can shut them down and then turn them right back off, and there's really nothing nefarious about it. It just puts you in control.
Thanks, Pete. Walt,
You're welcome.
along those lines, to follow up with Peter's comments, at Quick Track, what Pete is saying, consistent with what you're finding in your day-to-day operations, or how can you enhance his comments there? We have the lawyerly view from protecting our customers. What about in reality? How does that work from your end?
Yeah, I think Peter's right on, and I think Dan, you even said it earlier. I think the key is to have as much information when you go in on a loan with that customer, that client, which is where we come in as on our inspections to start with, right? I mean, you want to see what the site looks like. You want to see where the business is, how is it being operated. I think that's critical. And we always wonder sometimes, and I get it, it's a budgetary item, but why every deal doesn't have an inspection of some kind or another, just to see what and where something is going in. And I think again, to Peter's point, putting the block boxes on really in the initial start of the lease, when everybody's happy and there's it's no big deal. We just go in. It can even be connected beforehand, but we just go and plug it in, make sure it's activated. It's a lot less stressful for all involved doing it then than going in on let's say somebody's in arrears and you kind of walk in with the box and you're saying, yeah, this is just to be a power what's the term we use, Peter?
Heavy hand.
Yeah, and so it's a lot easier doing that then. beforehand. That's what we would advise. I think, quite frankly, I'd have one of these on probably every piece of equipment I put in. It just gives you that leverage. You probably won't even have to use it, but it's like having your water threatened to shut off. You're going to probably pay it, or you're going to find the funds to pay it. So to me, it makes total sense, which is the reason that we decided to go in with these guys and perform these
Also, it's no different than we were in college and they, we're going to cut our cable bill off because we weren't paying, or you found a way. We had one less case of beer at the party that week.
Exactly. Yeah.
Figured out how to do it.
Well, priorities. Yeah.
It's prioritization. So along those, so I think it's really important. I think what we're trying to say here as a group is, the more information you have up front, the more information you collect as you're going down the road. Again, the super majority of our customers pay their bills, and otherwise we wouldn't be here. We'd be out of business. But there are those folks that need our assistance to sort of prod them in understanding it. I didn't force you to come apply at North Star Leasing for that new piece of equipment. You came to me, I approved you, you agreed to the terms. Now figure out how you're going to make the payments back to us. And, business go up and down and so forth. But at the end of the day, you're using my equipment. And I like the way Pete sort of let that person hang themselves. Oh yeah, the equipment is no longer here. I actually sold it. I see that Mike Major, who's our collections manager at North Star Leasing and a 30-year retired Vermont Chittenden County sheriff here in Vermont. You've now changed the conversation from, oh, I want to help you, to, no, you need somebody beyond that because now you've sold my equipment. It's like you've just changed the entire conversation. And what we have found is that's when that heavy-headed conversation comes in and says, do you realize what you just did? You basically just sold your neighbor's house without telling them. And so that's a whole different world. But again, if you get all that information up front during the application process, it is so much easier to figure out what's the tone of this husband and wife team. They have, more than 5, 6, 7, 8 employees. They sort of have a pretty good team there. They're probably more likely to try and work with you as opposed to some person that didn't give you any information up front. It was like pulling teeth. And then all of a sudden the equipment's, he or she stopped paying. And now you're trying to find the equipment and you go Google Map and it's like a field and you're like, holy smokes. I was unfortunately involved in the Wildwood transaction back in 2008. I don't know if some of you on the call I know were involved in that as well. But Wildwood was a unbelievably large Ponzi scheme that took down and took about $272 million from a number of leasing companies, financial institutions, General Electric, Fifth Third Bank, Bank of the West, everybody, including North Star Leasing. I lost $1 million in that transaction. And I remember walking into the facility when there was a story about a story about a story about a story about a story for 6, 8 weeks. And I couldn't get a true story. So I got on a flight and I went out to Bloomington, Indiana, and I walked into this place and I almost threw up because with just walking into the place, I realized that I was scammed out of $1 million. And it's the worst possible feeling. And they had audited financial statements, but the audited financial statements were from it was supposedly a $200 million a year business that made the brown paper bags for the big box stores that you see in all the supermarkets and the big box stores when you clean up your leaves. But the audited financial statement, place was in Indiana, but the auditors were in Kansas City. The guy had $50 million of life insurance. All these little things looking back, it was like, oh my God, I've gotten scammed here. And so I guess I got off the subject a little about how to get paid in a challenging market. It was way too late when I finally decided, and others decided, to get involved to try and find where the hell where our assets were. And if I had done a little more work up front, I probably would have done the deal again because it was so much, but it still was, it was so disheartening. And you don't want to get into that stage when you walk into a customer's production facility and you realize, oh my God, there's no chance I'm ever going to get that money back. Again, everything is material. So I got off the subject there a little bit. We have a bunch of folks on the call here, and Mike Johnson asked the question, what prevents the customer from simply removing the block box and continuing to use the equipment? So I will let those who know better than me answer that question.
Sure. Yeah, it's a great question, Mike. Good to hear from you. So, well, first of all, you know, if Walt's team does such a good job. Often the customer doesn't know that it's on the equipment. It's pretty unobtrusive, and we have external installations and internal installations through what's called a DIN rail. So we just installed one, for instance, on a mobile beer canning line that's internal to the machine. So you would have to sort of really root around inside it to figure it out. But the more typical installation is just a secure box that attaches to the exterior of the device, doesn't affect the UL approval, doesn't affect the warranty of the device, and it's tamper-proof. And if somebody tampers with it, we know it. And yes, Mike, you might get a 5%er out there, like the guy with the skid steer loaders who wants to go and try to tamper with stuff. But you know, most of the stuff's on office equipment, doctors' offices, you know, or exercise equipment. Nobody's going to go messing with their 110 or 220 volt equipment, and if they do, we'll know about it right away. And it's an event of default. But the reality is, most people don't even know it's there. They don't need to know it's there. The Uniform Commercial Code allows remote disabling of equipment in all 50 states. This was a rare case where the law, I discovered, was ahead of the technology. Reading the UCC one day, I discovered that you can remotely disable equipment without court order in all 50 states. But the technology really wasn't there to do it except in limited circumstances. So I came up with the technology to do that. So yes, maybe you know, we expect, you know, a very small percentage of people will try to reconfigure their equipment, but most people, we figure, will just, you know, especially once it's industry wide, people just recognize that we have control over their collateral.
That's great. We have, let's see, Kristen Hawkins just asked, do you need your customers to sign a disclosure in order to put the black box on the equipment? I don't know if you just answered that question or not.
Yeah, great question. No, you don't. And for the reasons I just talked about, that you know, it's just part of the suite of equipment they're buying. It's usually installed at the sort of OEM level, and it just goes out as part of the device. And so they don't need to know about it. They don't need to approve it.
That's great. And can the black box be used on networking equipment when an abrupt power cut may be catastrophic? So if you put it on,
yeah,
I'm assuming you put it on a server and then it goes to hell.
Yeah, that's a great question. And so that's up to the disabling happens through our secure website, but it's done ultimately by the lessor. So the lessor decides when to cut power, and it presumably knows something about the customer's business, and won't do it at a time that's likely to cause, for instance, a production run to stop and cause damages. So if you're concerned about that, what you do is you disable it. You can time the disabling through our website, shut it off at midnight. When the people come in at 8 o'clock in the morning, the phone's ringing, you're on the phone, you say, do you want your stuff to run? You got to pay your bill. Or more likely, you call ahead of time and say, hey, look, you haven't paid your bill, and we just did this with a commercial. You haven't paid your bill, we're going to have to shut off your oven at a commercial kitchen. They said, whoa, okay, here's our credit card number, we'll bring you current. You know, so you let them know if it's a critical component that it's coming in advance.
Great. Walt, maybe you could throw in some metrics as to what's the cost benefit of the inspection. You know, what's the dollar amount that somebody owes me $3,000, I'm not going to probably have an inspection, or maybe we will, I don't know. Somebody owes me $50,000, it's probably a different story. How do the folks on the call make the decision on whether to engage your services?
Well, you know, our services are so really inexpensive. If you had even something worth $5,000, it would make total sense to utilize us. You know, you're talking about a couple $100 to get us out there and find out you know, what's going on, and or to put one of these on. So yeah, I think in my mind, Dan, it would have to be a almost, you know, something that costs almost nothing before you wouldn't utilize Quick Track.
Yeah, but like we all do, and I think we don't want to put, good money behind bad money, but what I hear you saying is it's an immaterial amount of money to sort of prove that it's bad money. You know what I'm saying? It's an investment that you want to make to make sure, A, the equipment's there, and if it's not there, now you can figure out what direction to go in.
Yeah, exactly. It's almost an insurance policy, really. It's just at least giving you a little more peace of mind that this I have a good idea of what's going on out here. And then it'll help you make a decision on your next step. Which is the reason we're out here, right? Is to help you, make a decision.
So we have a general question. What do we all feel? And I guess Sean, Walter, Peter, you can answer. What do you feel the biggest mistake funders like North Star Leasing make in the internal collection practices? What is it that, are we too aggressive? Are we too slow? Do we need to attain that yield that we original deal, and we're foolish? We're just like, I got to get this money back from this customer because he agreed to pay me and blah, blah, blah. So each one of you can take a quick stab at that.
Well, and as a bankruptcy lawyer, in my view, it's not looking at those at the priorities and not thinking about the priorities and believing your customer when they say, I don't have the money to pay you, I got to pay this, that, and the other thing. You got to understand that it's really choices on their part, and if they are prioritizing, and you just need to get them to prioritize you higher on the list. There are folks that they can avoid paying, they can renegotiate if they want to. And just understand, I hope I've helped you today with my list and some of the things you want to ask them about. Are you paying yourself? Are you paying your wife? Are you paying your kids? And these things happen all the time. So ask them, probe into the type of debts they're actually paying, and drill down in them, and make sure that I bet you will find there's room there for you to be paid, or at least pay something.
Yeah.
The other key is, don't require full payment if they don't have it. Just keep the money flowing at some level and keep communication open. You already said that, Dan, and that's key. Keep communication open.
Yeah, I think it's important, and I'll give Sean and Walt a chance to answer this in a second. I think it's very important to document that very first conversation with someone when you say, what's going on? And then, what's going on? And the guy says, I'm having a terrible time. I've got a sick kid, and that's taken my priority. And with today's technology, you can Google the guy's name in his little town, and you can see, for the most part, there's some sort of fundraiser going on for the kid. And you're like, hey, let us know when things get better. Good luck, and here's $50 towards a contribution. You'll get paid back.
Yep.
And to the majority of the folks on this call, those kinds of things aren't going to change your company's business model. And that customer is having a tough time, and they're going to have a hell of a lot harder time over the next couple of months than you are, based on their little receivable. And Sean, what about you and Walt? What is it you think that the group here can do a little better job, be a little more proactive, a little quicker?
What I think the group is hearing is just about, and I agree with Peter in making yourself a priority, but I want to add some flavor to that. And speaking of kids, thinking about it through children, would you rather your children make decisions through fear or through being self-motivated to do the right thing? And there's a saying that people don't care what you know until they know how much you care. And my approach is I would rather work with people, not only up front, but through the entire process in a way that lets them know we care about that relationship with them, that it goes from connection to rapport to relationship, enough to be proactively to help them, provide them with options, understand what happens next, and work with them so that the motivation comes from them. The decision to decide to start paying you, again, comes from them. It's their conscious decision. I want to do the right thing. I'm being given a viable option. And you actually have them talk through and understand the repercussions, so that if you need that prioritization, that motivation, whether it be a black box or legal or whatever it is, one, they already understood that was the case, and they understood that you gave them every option and worked with them and went over and above in advance before that was made. And I think the old school mentality of the industry, some of my competitors, a lot of people who've been on the collection side of it is all that, it's this emotional decision of this guy's pissing me off. He's not getting back to me. How dare they make money on my equipment and not pay me for it? And, really hard to judge someone until you walk the mile in their shoes, right? So get on the phone with them and walk a mile in their shoes and understand their situation and get, give them some hope and respect the fact that they're a human being and you may not have the full perspective of what's going on. I agree with Peter and Dan. The vast majority of people want to do the right thing. But we immediately go to someone not paying back, not prioritizing you is that deadbeat. Well, those are the 5%ers, right? Or less than that, honestly. So, I'm about creating that, that energy in them and teaching my team to do that. And as far as Dan, to answer your question, as far as the biggest mistake I see funding companies make when it comes to what they're doing is they just don't have an airtight waterfall process. Everything is just kind of made on the fly. And, you look at the larger funding companies or the ones that are inherently being run a really tight ship. Every account is going through that waterfall. It's a pre-designed plan, right? Every person, their role, what they're doing, how long the account stays where is predetermined to optimize the success for the type of paper they're writing. And that is so infrequent because so many funding companies are focused on the front end and how much business we can drive in and our broker relationships or whatever it is, or, the direct selling side that the back end is an afterthought. The dog agrees with me.
That's the, you sick the dogs on them and that's how you get paid at the end of the day.
There's that prioritization, right? If they can't internally motivate them. So as I go in and do consulting with funding companies and really get into their process, I find out that there's no champion challenge. Accounts sometimes move before 120, sometimes don't. Sometimes the communication at level is this. We didn't get to this one as much. We were too big. It's just all over the place. And these are large funding companies. And that, to me, not having that process would save millions of dollars over the lifespan of that business. And it's not often looked at that way. And that would be my answer to that.
Great.
Let me just add to Sean's contribution. That's exactly right. The people who are treated well in the collection process don't end up coming to see the bankruptcy lawyers because they don't have an axe to grind. The people who are real hard-nosed collectors, they're the guys who come into somebody like me and say, I want to screw this guy. I want to file bankruptcy just because this guy's been busting my backside. So I couldn't agree more.
Yeah, and I would echo that. And it's amazing to me how often someone will call and go, hey, we need you to go check out this business or this site. We're not even sure if they're still there. We actually get that a lot. And I'm like, so I guess the term is communication, which all of us have kind of harped on is, if you have a process that you're communicating with these guys, regularly so that you kind of know that they're still there. I mean, it's actually very scary how often there's no idea what's going on. It's months and months before they try to call us in on the
Just want to remind everybody, there's a good question here is, if someone sells our equipment, that's fraud. Somebody not paying their bill is a different story. But if you sold my equipment, that's fraud. And you have every right to then go criminal on them as opposed to some guy that's having a tough month, tough quarter, tough year.
Yep.
Another question we have here, if you use the black box to kill office equipment and the customer files bankruptcy, does the automatic stay require you to turn it back on, or is that something that the debtor needs to go to court to obtain relief?
Wow, that's an extraordinarily informed question. Which of you lawyers there are asking these things?
That would be from Mike Johnson, just in full disclosure there.
Yeah. So it's a good question, Mike. I think the answer is you're at the status quo if you file bankruptcy and your equipment's been shut down. So let's use the example I used of a bank offsetting your account. If the banks offset your account, you have to go into bankruptcy and then ask for the money to be put back. In this case, you'd go into bankruptcy and you'd ask for the equipment to be turned back on. So it's a bit of a process. It takes a little bit of time. It's not automatic. Good question though, Mike. Great.
So we have 5 minutes left on the allotted 60 minutes, where we have, it's free flowing. Anybody on the call? We have Stephanie Hall, who we've heard her ask questions on other shows. Paul Fogel, if you have some insights that you'd like to add as to some of the best practices that you and your company are doing. Mark Bonanno from North Mills, unbelievable growth over the last year or two. How are you controlling? How are you guys collecting? How are you, I know you guys have increased your funding volume by dollar amount, by transactions, by credit score. What's the best practices you guys are using? And congratulations on that.
Hey, thanks, Dan. So I think most of the tools that we're using in the majority of what we do is titled assets. So, we don't use a block box, or we haven't been using it, but there probably are some asset classes that we might want to take a look at that on. We do use GPSs. Obviously, we don't disable the GPSs, but it does give us a good understanding, at least where our equipment is when we go to pick it up. I think, one of the latest tools we're using is just going on and being able to look at and see if customers have gotten PPP money. So there is a website that you can go on, you type in the customer's name and state, and you can find out if they've received PPP money. A lot of our customers are telling me, I haven't received my PPP money yet, or haven't filed. And then you find out and said, really, I see you brought in $60,000 just last month in PPP money. So, they're kind of surprised that you could actually see that they did take PPP money. But that is one of the tools that we've been using to help us better understand what the customer is going through and what type of financial assets that they do have, as far as a wherewithal to pay.
Great. I think that's again, it's one of those things where you just ask them the question, let them answer the question, and then you say, really? I'm looking at right here. It says you got, oh my gosh, I can't believe that. I guess it must have come in while I wasn't looking, but I really can't talk right now because I'm teeing off in Palm Beach at the golf, at a golf outing. And it's like, holy smoke, Sparky. All I want is my monthly payment that, I'm just trying to help you grow. And by the way, you're down in Florida on the vacation because of the equipment that I leased and I financed for you. So just, help me help you here, bud. That's all I want to do. And I'm not looking to come take the equipment back because that's the least effective way to get my return. And it's just a heartache for you.
One of my favorite was actually a street sweeper that we had financed, and the person told me that due to COVID they weren't working, they didn't have any way to pay me, and we did. I guess they forgot that they had the GPS in there, and since the street sweeper goes really slow and you get the little breadcrumbs of where they've been, I could see every single house in the route that the guy did in his private developments and everything else. So. When we came back and told, when I said, well, the equipment's not working. And I said, well, I can see it's working. If you want, I can explain to you what route you guys did yesterday. And then they were able to get some funds back to us. So it's amazing sometimes when you use the different technologies, the information that you have, so it's not a one-sided conversation, where it's you asking for funds. I mean, I get it, Walt. You say you're amazed at how many people don't know that if a customer is at an address or not. But a lot of the times, these customers are not answering the phone. Once they, the challenge is getting them on the phone to even be able to ask them, "How can I help you?" Right? And we had customers, same thing. Dan, when you were doing the, restructures early on, where we were calling customers back, offering to restructure their account, and they wouldn't return our phone calls.
Right.
So, when you get a customer and they're at that point where you're trying to help them and they're not returning your calls, it could quickly escalate, Walt, to where I don't even know if they're still at that location or not. Right. And it's not for lack of trying. It's just because they've shut down all communications.
No, I hear you, Mark. You're exactly right. And that's, that's when call us up and go send somebody out there and see if they're there. That's what we'll do. That's what we're here for. So if you guys ever have that, let us know. And, we'll take care of that.
Yeah.
We have,
That $100 or whatever you pay us, that's a small investment to get a jump on them, skipping out.
what are the most surprising collection trends we've seen since COVID-19? That's a general question from Stephanie Hall to all of us. And I'll answer from North Star Leasing. I am blown away by the number of folks that paid off their obligations early. I was really surprised. They got PPP money or whatever. And I think going back in April, May, June, July, I think folks just wanted to clear the deck. Again, our transactions are with probably smaller businesses than some of you others out on the call here, but I think they just wanted to clear the deck and be debt free. But I was blown away by the number of early buyouts that we were requested. Sean, or to the group here, anybody else want to comment about it?
Yeah,
Well,
on our end, I would say that one of the things was interesting because many of the funders started holding on to accounts internally, reallocating people to customer service and collections. We kind of expected a pretty downward trend for a while for us, and that was only about a 30 to 45 day stint. And our effectiveness level, our payer rate skyrocketed. The number of people that were, paying in full, settling in full, setting up payments, people were answering their phone because they had a more legitimate reason to not pay. And our approach is to then come in and work with them, develop that relationship. And so we started out really small with some people, but then as that PP money came in, they felt more comfortable. Yeah, same thing, clear the deck, get the higher interest. We do a lot of MCA stuff as well. So it's like, get all that stuff off of the books. So that was really surprising that even though our volume of number of accounts had gone down, our effectiveness rate had gone and surpassed that. So our performance and collection revenue actually dramatically went up despite less accounts. So that was an interesting collection trend. I think another one that's interesting is that I'm just hearing that recovery is very busy, that there are a lot of folks going out there still in repossessing and yanking equipment. And I was a little surprised by that. That was something recently, as I heard, as frequently or as early as earlier today. So that was surprising to me that that heavy-handed approach was still, because I'm getting mixed reviews from what clients are doing with that and what we're doing with it, right? So I think in today's cancel culture and with what's going on, there's just anything you can do to avoid, that and other areas of risk right now for your brand and for your company. We're so close, hopefully, to the end of this, right? That was a surprising trend. I know everybody's antsy if you're not getting paid and things like that, but I think the risk factor is still pretty high there. Not that we're not doing repossessions, we totally are, but we're going to be really specific and strategic with trying to accomplish those with our clients. So
we have one more question here from Dale Kluge. What's the expectations of new startup business opportunities this year that are reincarnated businesses failures from last year? And I think I asked that question a little differently. I would say, what are the expectations from restarts? I think there's a lot of businesses that just shut down, close the doors, and just try to hunker down for a little while. So I think there's a big difference from restarts and startups. I think there's an awful lot of companies out there that have taken this last 12 months and have built a business model that we weren't thinking about. I think takeout food, if I would do takeout food all day long, more so now than ever. Why? I have 3 daughters, 25, 23, 21. They're excellent cooks, but the majority of kids who are under the age of 30 have no idea how to cook from home. They are takeout kings and queens. They haven't learned how to. Home economics to them is no longer. I mean, I'm 55 years old. We had to learn how to cook a little bit. The kids today, they eat out all the time. So now they have to take out. So if your restaurants have shifted from being in restaurant seating to takeout, and they're still serving good food and it's reasonably priced, I think it's a great opportunity. But what about some of the other folks out there? Are you looking at?
Dan, that's great question. You know what? Here's an interesting statistic. So it's been a trying year and a half, right? But February 2021, months ago, saw the lowest bankruptcy filing since 2006. 2006. So it's been an extraordinarily quiet year. And so, who's suffering during this pandemic? Bankruptcy lawyers. But, it's a joke. But it's true. And they're not just, level with 2018 and 2019. They're the lowest since 2006. And I guess the question is, we've also seen a lot of downturns in the hospitality sectors, restaurants, entertainment venues, and the like. But, I think the general consensus is the PPPs and the other subsidies, as well as the deferrals from folks in the leasing industry, have created an artificial bubble that people have been living in. And it's propped up companies that otherwise would have, frankly, died, even without the pandemic. They should have died. And
but the good news is, Pete, the good news is that I actually found a GoFundMe page for bankruptcy lawyers. Bob Hanna found one, and we're going to pass it out. Everybody's going to get that.
Great.
So with that, I want to you all committed, which we're thrilled about, to an hour, and we're at an hour and 6 minutes into this. I want to thank Blair Dawson from the NEFA Association for putting this together. I think obviously we're all looking forward to seeing each other in person sometime soon, but sooner rather than later we'll be doing that. But Blair did a great job of putting this together. I want to thank Pete Tamposi, Sean Smith, and Walt Graham for helping out on doing this program with everybody. I would like to encourage everybody who's on this call, and also to reach out to 1 or 2 or 3 other folks to get them on the virtual calls for NEFA as we traverse this time, because at some point we'll all be back together. But in the meantime, it's good to see everybody's face on the screen. And with that, I'll throw back to Blair as to how to wrap this thing up. But thank you very much.
Thank you.
Thank you, Dan, and thank you, Peter and Sean and Walt. This was wonderful, and I really appreciated hearing from all of you, and I appreciate you being here today. It would be wonderful if people wanted to stay on and continue with the networking portion of our virtual exchange series. So if you have an extra, 25 minutes or so, stick around with us. Turn your camera on, turn your mic on. We'd like to make this as interactive as possible. I loved Dan's plug about continuing to join us on these virtual webinars. We're really happy to have everyone here and can kind of continue this communication while we can't also be together. But we are really hoping to be together very, very soon. So just to give you a few save the date items while everyone is still on. We are doing a virtual tequila and mixology tasting event on May 13th. So you can go over to our website, register on there. It's going to be a really fun night with a half-hour session on the history of some of the tequilas, and then a half-hour of networking once you've had all the tequila. And then on June 3rd, we are having our first regional meeting in over a year, the Baltimore Crab Feast. So for those of you on the East Coast or those that are willing to travel, we would love to see you there. Followed by, in June, we are doing a hybrid event, a little bit of virtual, a little bit of in-person. Sean Smith and his team at Dedicated are hosting us for our next virtual exchange series in June. So we're going to be streaming live from his office, so that we'll bring you this virtual content that we're doing right now, but we'll also have some space for people to come in person and join us for the panel. So we're really excited about that. And then that evening, we're going to do an in-person networking event in Minnesota. So stay tuned to register for those events. We are really looking forward to seeing everyone there. So for those of you that are going to stick around and join us for this networking portion, I just want to pose out a first question to kind of get the ball rolling and ask, this kind of goes beyond collections. It can be sales, it can be anything, but what is your best secret tip to get someone to return your call? And I have to give Sean this credit for that question because I thought it was a really good one. So I'm going to ask him to go first.
I was going to say, I think I can answer Peter's and Walt's, just turn the box off, that would get her done. But, look, in third-party collections, we've learned how to collect accounts on stuff that most of our partners have thought is basically dead. They've exhausted all their efforts, right? So you have to be thinking about, how can I resurrect this deal and get it paying again? And the best tip I would give is that the either heavy-handed communication approach or the lack of approach, like changing your approach and how you reach out to people and the consistency of that internally or externally, whether you're a funding company or whoever you are, like the words you say, how you say them, and how that makes someone feel on the other end of that really, really matter. And then the consistency really, really matters. If someone is just killing you with kindness over and over and over again and trying to work with you, and then drag-netting that out, starting with you directly, and then maybe going to the business line, and then going with some of their team, and right, and just consistency and persistency, but with that positive message, they're going to pick up. And then when they're met with an authentic person who shows empathy, cares about them, and works on a viable solution for them, you're going to increase your success dramatically rather than reading a script, telling them what's going to happen to them, talking about the payment. The payment and the deal getting set back up is the byproduct of doing the front part of that process right. And there's still just so much old school thought process in the collection side of things, and just treating people like debtors and things like that instead of a borrower and a client, and then incessantly communicating to them in that respectful manner. That is one of the secret sauces to Dedicated, for sure, that our clients so often don't do. They're too busy telling them, this is what you need to do, this, you got till this time, and there's a place for that, but that would be my secret tip.
Thanks, Sean. Anyone else want to add something?
Well, I can just tell you from our perspective, and one of the things that people use us for is people are kind of used to getting a letter in the mail. They're used to getting a phone call. When someone shows up at their door or at their business saying, hey, by the way, you owe ABC company X amount of funds. Would you mind giving them a call while I'm here, or reestablish communication? I'm good telling you what my clients say is that has a little more impact. It certainly doesn't work 100% of the time, but it definitely kind of makes people go, wow, these guys are serious. They're sending somebody out here, So yeah, there's a cost associated with it, but apparently it's pretty effective because our clients utilize it all the time. So just something to keep in mind, whether it's us or you send one of your people out, if it happens to be in the same city, go knock on the door. I mean, Sean knows that. It's face-to-face is critical. If you can do that, it makes a big difference.
Yeah.
And guys, I'm going to go get my COVID shot right now, so I'm going to jump off. And thank you everybody for attending.
All right. Bye, Walt.
Bye, guys.
See you later.
Thanks.
You all, thanks. Yeah, I'd echo what Sean said. It's, getting people to answer the phone is a really matter of leverage. It's how much they think they need to answer your call. And, in Sean's case, he's usually done a great job building a rapport with somebody. So that's the leverage that he creates a personal relationship. People like him or his team and pick up the phone. But if you don't have that relationship, you can just let them know that you have control of their collateral very quickly, very easily, and then enter into a productive conversation after that.
Yeah, so I'm hearing bring your most authentic self, door to door. So do you think we should start sending Steve Elworth out and knocking on people's doors when they don't pay their dues? It's knock, knock, knock. Steve here. For those of you that have not met Steve yet, he is our new director of membership. So you'll get to know him really quick at all of our events, but he also might be knocking at your door if you don't pay your dues.
He just needs to pose as the pizza man.
They make the mean pizza. That's all I'm saying.
Hey, I will throw in a pizza if you renew your dues, and I'll make it myself. Sean's seen my skills. I've emailed him a picture of my my pizza making skills. It's legit.
Which is funny because I just made that up when he first joined. He called me and I was just like, or I called him for something, and I fake ordered a pizza with him. So I was like, yeah, I'm just calling to order this one type of pizza. And you could just tell he was genuinely confused at first, what's going on? So that was his introduction from Dedicated to NEFA. I ordered a pizza from him, and then I found out he actually oven baked.
And
Like, what do you got? Like a stone baking pizza system set up or something? So
Nope, just just regular oven. But I mean, it is my favorite food. My daughter can tell you that, and she tells everybody pizza's my daddy's favorite food. And so I don't know, Pizza Man. I guess maybe my NEFA nickname, unfortunately for me.
There are worse nicknames.
That's true. I've been called worse for sure. So
That's funny. Real quick, just to add my 2 cents, I've been in sales here for a number of years. And I think when I first started, it was a hard lesson for me to learn. When I was calling and leaving voicemails for people, I just wanted them to call me back. And so it's like, after doing a number of, webinars and reading books and articles and stuff like that, it's all about like, what does the person on the other end want, right? Whether you're talking collections or the company that you're prospecting, leave them a message that makes them want to call you back. Don't just say, hey, yeah, you should call me back. It's all about like, what is their incentive? Why would they want to? They're busy. So you better come up with a good idea. You better do some research on who they are. And for our collectors that are here, obviously it's, figuring out what's their emotional, trigger point there. So hopefully that transcends industry lines here and can help more people on the call here.
Yeah, I love that. Stephanie Hall, I see that you have joined us with your camera on. Did you want to add?
Smith shamed me into showing my face. So no, I have nothing to add.
Creative way.
Actually, I will tell you, I always tell Lisa Rafter that I want to be as connected as she is when I grow up. And she said, start a publishing company. When you own a magazine, everyone takes your call. So there you go, collectors. Start a magazine.
That's leverage. That's leverage.
a first rapport, then block box, then private shaming in the chat room. See how that works? I just work down the waterfall process till I get the, the desired.
Yeah, 20% waterfall right there, Sean.
I live it. See, I practice what I preach.
So one of the things that we first asked when we came on the call, are people still battling with no-fly restrictions within their organizations? And if you are, when is your company looking to list something like that?
Dedicated definitely does not have a no-fly restriction. If you want me to come out and visit you tomorrow, I'll hop on a plane. That's our policy right now. But that's speaking for me and Mike, who are both very open to travel. But that's our company policy right now.
Good. So we'll see you at the conference. If you say yes, so you don't have a fly restriction, I'm going to book your attendance.
You've already. You just signed you up. Everybody who shook their head just signed up automatically.
Signed up.
Do it.
Does anyone want to share anything that they have going on that they want to make a plug for their own organization, or something else that they see happening that's been really positive?
I want to reiterate the importance of the tequila event. I expect to see all of your faces there.
Sponsored by
Stephanie,
Bank Financial.
Tell us that again. When's the tequila event?
It is the 13th. Am I telling the right story? Yes, May 13th. It's at 5 p.m. Eastern and also at 5 p.m. Pacific, 2 sessions.
You can tell times are changing, because I thought I'd never hear anything but Stephanie plugging a vodka event. And now here she is plugging a tequila event.
It was gin for a while.
Gin. There's some history behind there.
It's a good trend.
That's an inside BD joke, I guess. That's
Is it bad practice to go to both happy hours? Asking for a friend?
If you want to register for both, I encourage it. I will be doing the same.
All right, I like it.
And that's one that the networking will be by the second one.
Hey, Blair,
I might hand the networking baton by that time.
Hey, Blair, I have a question for you. As somebody I've heard other conferences have done, I've heard of having a band or something to signify whether you're vaccinated or not, or something like that, or some form of way of, from a comfortability or distancing standpoint, some form of system. I've heard different ways of doing that. Is NEFA thought about any of that, or are we gonna wait until we get closer to the event to see, or, what's going on there?
I heard that everyone
we're
that
gonna-
didn't want to be touched was getting a vest like a service dog. That says something about not going.
I'm thinking like a scarlet V for those that are not vaccinated. So just go with that. No, but I think what we're going to do is we're going to wait to see what the restrictions are in Charlotte and North Carolina, and then we're going to move on whatever they say, and we're looking at that for all of our regional events. So for our Crab East in Baltimore, we're looking at the regulations within that state and that city specifically. It's such a touchy thing, and we don't want to mandate something like that because some people are just not comfortable moving forward with the vaccine. So us as an association can't really take a stance on that. So we're looking to local legislation.
Nice.
Yeah, being a Northeasterner, you really got to pay attention to the numbers because there was a huge explosion in infections today in Chicago. I read something earlier. A whole high school, it was 650 kids were sent back home. And it was all about a bunch of folks going to some bar at some point. I just got a flash during our session here.
Wow.
But, I'm not being a pessimist. I get my shot tomorrow morning, but the variants, it's questionable what those all are going to mean at this point. And getting on a plane to see somebody just to contaminate somebody else is not really a great idea. So we got to play it by ear. We are so far around from the corner at this point.
Meanwhile, Texas and Florida are like, here, hold my beer, basically. That's
Right.
kind of their legislative approach to it.
Florida doesn't know how to count, and I'll leave it at that. And that's coming directly from the Floridians, including my daughter who was going to school down there. And University of Tampa doesn't even respect the virus. In fact, there was a professor that was fired because there was a huge demand for his class online, and he refused to do it in person. And so they fired him. So that's the politics down there.
He refused to do it in person or online?
No, he refused to do it in person.
Oh, okay.
So and he had a huge demand for his class. Listen to the students; they want this guy. And so my daughter wanted online. They said you can't have it; it's got to be in person. He says, "Well, I quit," and that's what happened.
Wow.
It's nuts.
It's a wild time for sure.
Yeah.
It's really nuts.
Yeah.
I like NEFA's approach because I think it's meet people where they're at, follow restrictions. And, I've seen events too where if you are comfortable with a mask, wear a mask, and you're going into a situation where, that's why we plan the June event is mostly an outdoor activity, and people could even go to the online event, even if they come into town, right? They could go to the online event digitally and then go to the rooftop deal where you're outside at least. So there's, and we've already talked with the place that, it's limited capacity. It is certain number of people at a table and different things like that and I think those things could easily change by June. But, either way, as long as people know in advance kind of what the situation is, they can make, their decision based on that. And
yeah, it's hard to tell. I know the IFA's got their event going on in May in Scottsdale, and I don't know, that smells super spreader to me. I'll have my shot at that. I should be ready for that, but I'm not really sure I want to do that one. So.
Most BD people I talk to are also talking about getting theirs or already have theirs too, which is another thing to consider, is the fact that because we want to travel and we want to see people face to face, a lot of people are just getting it over and done with now. I think especially by Charlotte, I would be shocked if the majority of folks didn't have that done in our industry who travel and quite frankly are mostly antsy to travel, at least that I speak with, right? So I think the summer events will be kind of people who really want to get out and about, but by fall, I would be just, like I said, it'd have to be some crazy variant or something that's sweeping the nation, I think, to stop most folks.
Yeah. The problem here in New Jersey, we have a major disorganization. We're told you go onto a website, put your vitals in there, and they'll text you when you show up for your shot. Pretty simple, right? Well, guess what? All the independent healthcare centers, Rite Aid, CVS and all of them run their own things. And then people, I got to go to work every day, but there's people that are home all day long, prompting all the sites to find a cancellation or an oversupply of doses before they throw them out. And those folks are getting in front of the people. I'm 63, so I'm kind of like in the middle there. In New Jersey, just opened up yesterday with 55 plus. So I know like I'm never going to get my shot. So yesterday morning, I'm just screwing around with the websites. They're 8 o'clock in the morning. And there's a Hunterton Family Health. It's a group down there in Flemington. It's about a 20-minute drive from me. And I said, gee, I never registered for this one. So I put my stuff in. My phone rang 2 hours later. Come in Wednesday morning at 9:30. So I said to him, like in all fairness, there's people in front of me. Well, it's not working that way because we just got approval by the state on Thursday to open up on Monday at this high school, another geographical location. And he said, you just did it at the right time. It's luck. And I'm ahead of the post guy, the postman, the guy who delivers our mail. He hasn't had a shot yet. He can't take off from work, and they don't come to him to give him the shot. And he's a federal employee touching everybody's mail. How does that make any sense?
Wow.
Does it make any sense?
Yeah. I know that they extended, at least for virtual health system, they extended their hours there to like 6:45 because they were finding that people who were frontline employees were not able to get to the shot sites in time, and the vaccine sites in time to get their vaccines.
Yeah, it's nuts.
Yeah.
Really amazing. But yet there's supply, and I'm not sure there's glut, but we've got good supply here now. But the process, would look pretty cool. Like you just register and you get called. And then we realize that it's not working that way. And then they got people here, only in New Jersey could this happen, where you pay somebody to basically ping all the sites for you. So they showed this one guy in the newspaper last week. He had 4 computers on his table. He basically maps up and screen with your stuff and just pops all the sites, gets you your appointment, and you pay him $50 or something. Unbelievable.
That's definitely New Jersey.
Yeah.
Right.
There's an opportunity. Someone's going to take it. I'm surprised the truck wasn't hijacked with a vaccine, and you can get it, on yourself for $100.
On the East
I
Coast.
don't know if I would trust that one.
Yeah. Well, there's people that believe you get the vaccine, you can do whatever you want. So that's the other picture that's here too.
Well, I think to Sean's point too, by fall, hopefully this will all kind of subside and so we can get back to some sense of normalcy. So in the meantime, we'll just have to do a hybrid approach. I think that all makes a lot of sense.
Yeah.
Before we hopped off, because I think we're pretty close to wrapping up, was there anyone else that had a non-COVID question before we hopped off?
I know skiing in Chile and Argentina looks pretty good this summer.
You can get
Is that snowbird behind you, Bob?
That's actually Mammoth. That's the Cornice right there. Gotta do this right. That's the Cornice run. That's a nice drop. And that's chair number 9 right behind me.
Wait.
Yeah. If you want, go to Mammoth Mountain /cams, and you can see exactly what I'm looking at, and it's live.
That's live right now?
No, but if you go to the website, you'll get exactly the same picture. This is the McCoy camera. There's a camera up top, and that one, you can move the camera around and zoom in on people and watch them. Kind of creepy.
Wonder if those cameras to them. Somebody should get on that.
Most of them are frozen. They're frozen from last year. They couldn't get somebody out there due to COVID to fix all the cameras, so some are frozen in position.
Wow.
So I got a question. Who's doing the mixology? Is Stephanie, are you leading that?
I'm going to lead in the drinking of it.
Okay, all right.
No, if I'm not mistaken, Blair, someone from the vendor's shop is walking us through it, right?
Oh, okay.
Yeah. So there is a expert mixologist. So they work for the organization that's building out the kits for us. So it's
Nice.
a reposado, a mezcal, and a blanco tequila, and then they have like these fresh squeezed juices that go with them. And then we're gonna mail out all the kits.
Nice.
And no drink tickets.
All right.
An expert mixologist.
Yeah.
No
I
drink
like
tickets.
it. Well,
Yep.
I was hoping that at some point we could have Steve lead us in like baking some pizzas or something like that. We can all do some pizza baking at the house.
There we go. Yeah. I forget who mentioned it earlier, but they're saying that people don't know how to cook anymore. And so that's been like, especially during COVID, that's been like a huge thing of mine is to go like to watch all the Gordon Ramsay and Anthony Bourdain videos and try to do like what they're doing and everything. So hey, maybe in a year from now or something like that, I'll have the skills to actually lead something like that. But I'm all for it.
Steve, you have
I
that
think
pizza
our
machine?
series.
What's that?
Do you have that pizza machine, Steve?
What's that?
The stone. It's got the stone
Oh
disc.
no.
I have that, and what we
I've
do
been
is we
doing
go
it-
to the pizza place and we buy the dough from the pizza
Yeah.
place.
Oh, you mean the stove? Yeah, I don't have that one. I've been doing it in a cast iron skillet lately. It's pretty good. So
That's like Chicago style.
yeah, gives a little deep dish.
Nice.
I
Yep.
did some the other night, right on my
Hungry.
grill.
Yeah, doing the
Came
grill.
out great.
On the grill, nice. I gotta try that.
Yeah.
Well, you
Meanwhile,
guys-
all
You
the
could-
women are throwing toppings on cauliflower and calling it pizza.
And
Hey,
ordering
I'll
thin
try that
crust too.
I just got my cholesterol numbers back. I should try that.
I had one of those pizzas in Phoenix, and it was exactly like a saltine with ketchup on it. That's
Oh.
how bad it was.
That's not good.
when we did that food walking tour for, I think it was for NEFA, Stephanie, right? And we went to that artichoke pizza place.
That was so good.
I'm like, I'm not even an artichoke dip guy, and that was like one of the most amazing pizzas.
Was that the New York thing that we did?
Yeah.
Yeah, I remember. Yeah, so we had leftover pizza, right? Remember, it has cream cheese in it too. So we're in a park, only in New York, and Bob Cohen was laughing about this. There's a homeless guy, okay? Clothes are ripped and everything. And we had like a whole pie of that pizza. And I gave it to the guy, and he goes, what's in there? And I look, artichoke. Oh no, I don't like that kind of pizza.
I'm
One
going
guy
straight.
turns it down. And Bob Cohen says, only in New York would the homeless
Right.
reject free food.
Oh, man.
I hope we do that event again though, like, or do something similar, whether it be like something in New Orleans or Nashville or Memphis or whatever. Like I really enjoyed that. It was nice.
That was a great event.
We
I'd
had
be down.
Indian
100%.
food, pizza. I mean, we had all this. I mean, it was. I remember by the end of that, Stephanie and I were like, oh my god, like it was food coma to like the nth degree, and you're like, let's put some alcohol on top of that as well, because I already am devoid of energy from walking, but it was a lot of fun. It was a really good event.
It was a lot of fun.
Yeah, we're planning on doing something in New York in November. So I think that the tastings was the last one we did in New York, and we would do definitely something like that. And Chad was even looking at like a riverboat cruise around Lady Liberty. So we'll see if that's an option.
Yeah, on that one, we did the free Staten Island, cruise to and fro, But,
Yeah.
But the cruise is nice. You know who does that? NYIC, TMA, and the IFA, they'll do the boat cruises often too. With the
really?
bars,
Yeah.
cigars, and all that stuff.
Yeah, but we'll put something good together.
Well, good to see everybody. I'm gonna hop off, but
Yeah, me too. See everybody. Thanks.
Got close
All
up
right,
Dennis.
thank you, everyone.